Hey everybody, welcome to the Closing Beat. Happy Monday. How's it going out there? Did you have a good weekend? You can't talk back to me. It's just me. We are financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. Did you have a good Super Bowl weekend there? I watched some of it, fourth quarter there, but Cody had all these ideas. He was like, hey, let's run some stats against the Super Bowl and the stock market and see what happens when certain things happen through the Super Bowl. And I think, you have that done?
Yeah. I mean, for the most part, yeah. It's
so if I hit this page here, there's Cody. Okay.
I am proud of you for watching, by the way. That's big.
Fourth quarter on, man. I forgot about it. And then I tuned it in. I'm like, got to watch some of it.
When I asked you, I thought you were like, nah, not really. I didn't really know what was happening this weekend. Yeah, we got best case scenario with the Chiefs winning.
Okay.
We had a couple smart clients maybe reach out, be like, hey, who are you thinking? I said Chiefs. Just helping clients get their dough straight in their gambling life.
Okay.
No big deal. The two times that the Chiefs have won it, the stock market on average is actually up 8.1%.
Oh.
So it's pretty good. The one time the Eagles have won it, the market was actually down 9.4% after the Super Bowl through the end of the year.
Ooh.
So kind of best case scenario there, if you actually like these stats. The 27 times that the AFC has won, the stock market on average was up 6.2%. So yeah,
and the Chiefs
are in the AFC.
Oh,
yeah,
yes, okay.
yeah, that's important. Forgot I had to clarify that. But yeah. So best case scenario for the stock market with the Chiefs winning.
Okay. And did you wanted the Chiefs to win?
Yeah.
Okay.
Yeah, I'm not a big fan of the Eagles.
Oh, well, yeah. That's tough coming from our side of things. Okay.
Yeah.
I gotcha. Okay, so cool. So we've got a positive omen sort of thing, more bullishness to head in there. Well, that the Chiefs have won there. So I hope if you were cheering for the Chiefs, I hope they did what you wanted to, right? I didn't have like a horse in the game, as they say. Horse in the race, so it didn't matter to me. Anyways, moving on, we've got inflation numbers coming out tomorrow. You notice how the market's doing the same exact thing that it did last time? What happened last time? We had a market rally leading the day before the inflation numbers came out. What happened when the inflation number came out? We were down hard. We're actually projecting, or analysts are projecting, they have their consensus, what they call it, to be about 0.5% higher. So we actually are expecting inflation to go up 0.5%. What'd the Fed say? If the inflation ticks higher, they expect it, they are welcoming it, and they're fine with that. It may have to tick higher before it actually goes lower. So we all have that in our heads, right? It won't be one of those days where inflation ticks higher and then that same narrative of, oh my gosh, the Fed's going to have to be aggressive. Everybody's just going to say, oh my gosh, the Fed has to be aggressive. Wait a minute. They said that they thought this would happen, and they're okay if it happens. So it shouldn't be one of those wild days. We'll see. House prices, I think, are going to be and are the reason that people are saying, maybe we're going to tick a little higher there, because you may have noticed home prices in your area just an ever so slight tick higher there. And what do they call it? Housing is the biggest weight in the CPI number. So you know how the market has its tech is the biggest sector and so on. Well, inside of the CPI number, housing is the biggest. You may also remember last week we had Las Vegas Sands, Wynn Resorts. They both said that their average rate per night, average room rate per night was at its peak, or as highest that it's been in a couple of years. And so part of the housing inflation numbers is housing, what do they call it? Housing away from home or something like that, meaning you stayed at a hotel. And so if we already know that those numbers are pretty high, then we can expect that to have an impact on inflation as well. That doesn't account for a lot. It's less than like 1%, if I remember right. So that's not like the reason it's going to be higher, but I think housing is going to be one of the things to look at. So we'll find out tomorrow. That'll naturally be a market mover there tomorrow. Let's go on over to the S&P here for today. We have the S&P steady, consistent, bullish day here. We gained just over 1% there. In the last 5 days, though, the performance of the market is 0.5% gain. So yes, today is 1%, but if you look over the last 5 days, we've really not accomplished much. And you can kind of see it here visually if I zoom in. We've had some up days, some down days, a little bit of sloshing around there. And so that leads us to just a small gain there. The S&P today, oh, I didn't get it. It gains a total of how many points? How many points did the S&P gain today? I'm going to pull it up over here so I can see because I want to make a point of this. We gained, in fact, 46 points today, 1.14% there. Nearly 20 of those points in the S&P. So we gained 46. 20 of those points, basically, were only because of Microsoft, Apple, Amazon, NVIDIA, and Meta. That's it. In other words, if those stocks would have been quiet today, 20 less points would have been gained in the market. That's the impact that they've had, just shy of 50% of the gains today, which is a common theme, right? That hasn't changed. In fact, we go over here. Oh, I got to go like this. There we go. Large cap growth is still where all the fun is. I've shared some of this with you in the past. I will continue to expand on it. Basically, think of it this way. If the line is going up, growth stocks are outperforming. If the line is going down, people are chasing value or the highly discounted stocks. Looking over here, we're comparing essentially large cap to small cap. Russell 1000 is another way people say large cap. If the line is going up, the large caps are winning. If the line is going down, small caps are winning. This is a little bit more jittery, but you get the point. People are chasing large cap growth stocks out there. For the bulls, that's where they want to take their risk at the moment there. We also continue to see cyclical stocks outperform what they're called defensive stocks. So cyclical stocks are things that we would spend our money on in a good economy, and defensive stocks are things that we would spend our money on regardless of the economy, right? So if we look, currently people are saying not worried about a recession because when the line's going up, cyclical stocks, large cap growth cyclical stocks are trending higher and almost about to hit new highs. The line's moving lower as we saw into the end of the year and a slight beginning of this year. Those are your, oh my God, recession is coming. I want to buy those stocks. You would see that line trending lower there. So at the moment, we have people in the stage of, I'll take the riskiest, most growth stocks that I can get that probably don't pay a dividend and would be highly cyclical to the economy, meaning they would be volatile based on what the economy is expecting, and people are not expecting any kind of recession, so you would say risk on at the moment, right? At least so far this year. Let's see if we can move on. Oh, this is going to be hard for you to see, so we'll do this quickly here. If I pop over here, there's a slight delay in this sucker here, but it'll come at me. There you go. Here's all of our sector performances versus the S&P. I did the same exact thing. If the line's going up, it's doing better than the S&P, that sector, anyways. If the line is going down, that sector is underperforming the S&P. For example, tech, obviously outperforming the S&P, very strong, got nearly 14% gains there. And so that's doing well. What is not? Healthcare still, consumer staples, utilities, your recession areas. People have no fear of a recession. So all of those sectors are actually beating, the tech, what's beating? Consumer discretionary, communication services, tech, all beating the market on the upside, which now is just visual, and you can kind of see it there. Very, very cool. So there's not much that's changed there is essentially what I'm trying to say, and no indications of that. If we look at the NASDAQ, still leading the way here, the year-to-date gains are at about 14%. Think of it this way. The NASDAQ has gained a total of 1,386 points year-to-date. I said, well, that sounds like a lot. Let's take a little bit deeper look at that. 975 of those points came from Apple, Amazon, Microsoft, Alphabet, Meta, Tesla, and NVIDIA. I just rattled off 7 names, but they also account for 2 tickers, 8 total tickers, because Alphabet is 2 classes of stock there. In other words, 70%, if we start right here, and I just plot my little line there, 70% of what you see to the right of the line is due to those 8 ticker symbols. 8. That's all. In other words, if you owned more of those than the index, you would be handily beating the index right now. If you owned less than that weighting in the index, there's no chance of you beating the index. See how simple that is? Right? People say you can't beat an index. Okay, it's just, yeah, you can. So there you go. I also want to mention that that's not a good thing, and I'll keep saying that. Not a good thing when only a few select are moving the entire market, in this case, the NASDAQ, because we don't want to rely, remember diversification, like investing rule number one, we want that diversity, and we want that diversity to be working together. We don't want to see some of the stocks doing all the lifting and some of them just floating around doing nothing, which is currently the case. So just a tiny bit of a warning sign there for the markets. The Russell 2000, nice little bounce here today. It's up 10% year to date. We've got the same issue here. Over the last 5 days, it's actually down about 1% almost. So even though today was great, if you just zoom out a little bit, you go, oh, okay. So we're just bouncing after a pullback. That's what we've got going on. Now, technical traders will like this because we're breaking through the bigger term down trend here. But let's zoom out a little bit more. And 1 second, let me go a little bit further. Can I go further? We'll say 3 years with a week. Let's go 10 years with a week and zoom out. It's going to mess up all the other charts, but so be it. We had this little downtrend here we've officially broken out of, and where did the downtrend stop? Right on top of what's known as minor support. So if you're a technical trader, you like the small cap location there, and hopefully things continue to wake up and move on in the right direction for you there. Just a couple of other things here. I want to point out oil, basically a snoozer today. Not a whole lot going on there. It remains near its lows. Bonds continue to at least attempt to rally here after last week's pullback, and it was a consistent steady hold all day, I should point out. So it wasn't floundering around. It was pretty consistent to the upside. Remember, as this goes higher, interest rates go down. So us that want to participate in the interest rate world with buying stuff, you want to see this going up. We should probably see more volatility on that tomorrow. And also gold, which has had a good run here lately, just continuing its pullback. Gold tends to do this, has a nice, strong, steady, consistent run, and then very quick profit taking or very quick pullbacks. It's very normal. Actually, right there's another example. Over here's an example. It's very normal to see that. Do want to point out a couple things sector-wise. Tech is currently your best performing sector so far year to date. And what do we got? It's one of the best performers year to date. About 15% gains there. That is beating the markets. Now you understand where we're coming from there. Communication services is the second best performer here year to date. And one quick thing to point out, if you're an options trader, then this is where you're looking for two reasons. Number one, it has the highest implied volatility of all the sectors. Just had a little extra time this weekend to look around. And if you look through, why is that? Why would the volatility be so high for these suckers? It's because you've got about 40% left of the whole sector that still has to report their earnings. So you've got a lot of unknown. Anytime there's a lot of unknown, volatility or implied volatility goes up. So for those of you that are interested in that, now you know where to look. We've had a series of great classes here, our Wine and Wealth, actually, over the past couple of weeks. Last week, we talked about the next level details between joint accounts and regular individual brokerage accounts, how the wealthy do it. And I'm not talking about tax loss harvesting. We went an extra layer deeper. I got a lot of good feedback on that class from people going, I never thought of that, man. That's incredible. It's just one extra little nugget. So be sure to check that out if you're one of our clients there. And the week before, we did return on capital. Specifically talking about that, using your dollars for the highest return on capital, even though you may make the same profit using less dollars to make that higher return. How could you do that? And specifically, what options are there for you? Stocks in the news here, and then I'll answer your questions. Okay, there we go. Bed Bath & Beyond. Anybody still messing with this? Looks like they're about done in Canada. Those stores are going to be shutting down. That was their news of the day. Try to save a little money there and work their way out of bankruptcy. Hertz, after the long run that they've had over the last couple of years, Barron says this is one of the best here. They said, and they had a way of they said it, I forgot. Best of the bunch. That was what the article in Barron's was about this weekend. So if you like Hertz or you're in Hertz, you like to hear that. Had a slight gain on the day. The Financial Times, I saw, they said there's more job cuts to come from Meta. They're working on a new round of job cuts. And so the stock was up just a little bit. Remember, that did help the stock before. So we'll see how that goes. Microsoft, back to Barron's here for a second. It was a bold statement by these guys. They say, you know what? Thanks to their integration of AI, they now have a chance to be a relevant search vehicle. And that's really what's been weighing on Alphabet here over the past couple of days, because they're seen as being behind the game. And lastly, JetBlue. Looks like the Department of Justice is going to block their merger or buyout of Spirit Airlines. So we'll see. That is just a report. I forget what Politico came out with it. So that is just a report from their sources. We'll see what happens there. In our Jazz After Dark here tonight, I feel sometimes, I don't jump out of my lane. You guys notice how I don't do videos on like changing tires or best places to eat. It's not my thing. I don't know that. One thing I feel like I have a little experience in, just from the location that I'm currently standing in, is how you can save some money on your summer plans, your summer trips, your summer vacations, especially if you're coming to Florida, because we're in Florida. I watch you tourists spend all kinds of money down here, so I'm going to offer some tips there. Tonight, come hang out, have a drink with me, and let's just see if we can't save you a few dollars. And, maybe you come by, you know what I'm saying? Maybe you visit here and all is good, and we'll see what happens there. What else we have? We had some good Jazz After Darks last week as well, so I hope you'll check that out there. How to hide your conversions from the IRS. A little different way of looking at it there. And what we're doing this year. We're going away from that typical, just general, you go see the other guys if you want that sort of general advice. We are going a little bit further. Oh, you don't like Spirit Airlines? You're like the only person that I've ever met that doesn't like Spirit Airlines. You have to know what you're paying for. You know what I mean? You don't expect first class and Delta with that kind of treatment. You get what you pay for. You're just trying to go somewhere. A lot of places here from Florida, that's like our go-to airline, because you're there. It's a straight flight. All right, just pack lightly and be prepared. Yeah. Are the people saying you can't beat the market from South Carolina? You guys have a slight edge. Who reports earnings after the close? I don't know. I didn't actually look. Usually I look at those in the evening. I'm going to guess Plantair reported earnings because that's one of the bigger movers here. Volatility. Tomorrow, what you have, pre-market, you got Coca-Cola, Marriott, and then aftermarket, you have Airbnb. That's kind of interesting. Akamai and Devon Energy. Herbalife, if you like that sort of thing. Herbalife is not, by the way, the last 6 of the last 8 earnings reports, the stock moved lower on that news. So if you're looking for something there. Oh, they got you for your carry-on. You got to be stealthy with those carry-ons. Be that guy that wears like his entire trip's wardrobes and doesn't take a bag. Get your toothbrush in your pocket. I've seen that. I recently found out you can do a rollover from a traditional IRA to an HSA. Can you make a video touching on the topic? You can do that. I don't think that was a private video for clients, but I just touched on that process, how you want to handle that. If you're going to do that, you can do that one time in a lifetime. Will the market stay up? Well, we know now it's dependent on 8 stocks. And Plantair, it is Plantair, yeah. So I don't know anything about their earnings, but that one keeps flashing at me there. You're thinking about selling a few covered calls on AT&T, are you now? What was the number? Let's go back. 24, you're saying. Oh, wow. Are you getting any money for that? That seems awfully high. I can't say that I would do that so soon. You're well out of the money there. And yeah, you're not going to get very much money. Let me look at that real quick. Yeah, what are you doing there? Maybe you're saying on the next rally, that's something you'd like to do. I could get on board with that, but not right now. Cheap. Yeah. Favorite 23. I don't see a question there. Nice. These 1% up and down days being so common makes me think we're still not out of the woods yet. Yeah, we've had a lot of that. Just 2 weeks ago, we had another full week where the market gained or lost 1% in one day. Keep in mind, that's not normal. So it felt kind of normal because we had some good days in there and you're like, oh, okay, this is fun. But that's not normal performance for a market. It's also not normal for the market itself to be up so much. It's also not normal for sectors to be up so much so early in the year. So there's a lot of things that are comfortably weird. You know what I mean? Like you don't almost want to like draw attention to it, but you know this is not normal, right? And this year it just happens to be to the upside. So a little change of pace. We are hanging out and having fun, and yet some idiot have to talk about politics. Oh, I missed it. I didn't say anything today, so I sometimes I'll say something just to get you guys fired up, but honestly, I could care less. It's you got 500 shares of. Oh, well, let it rally first, right? I mean, what's the sense? I mean, it's a great concept of saying, well, let me sell some covered calls, but not at 24. Did you see what you're going to get paid for that? That doesn't make much sense. Can you tax loss harvest with Roth conversion gains? No. Are you trying to say something tricky there? Because there's nothing. Now, are you saying I did a Roth conversion for X number of dollars and that's taxable income? Could I sell some short-term losing positions in a brokerage account and offset that? If that's what you're saying, I mean, you sure could, but you're still limited unless you're like an actual trading company or something. Well, then you wouldn't have Roth conversion, so never mind. Are triple net lease companies better positioned in the REIT sector? I would say as an individual you are. Yeah, I don't know about REITs specifically. Anything that is in the tech sort of cloud space for the REITs, your cell phone towers, okay. And then anything that is focused on that, hotel buildings or mixed use hotel / commercial, those are holding up. They did good with their debt too, I should say, kind of like the home builders. Municipal bonds definitely taking a lot of inflows. You nailed that part there. There is a lot of money leaving the market for bonds in general, but yes, the answer is yes. In my opinion, Mr. Dustin, the next Fed meeting, what do you think they will do because interest rates, or they lower? No, they're not going to lower it. There's no chance I think that they lower it. So for the moment, I would say no on that one. I think another quarter point is the path that we're following right now and where people are betting. Can you check companies that report earnings could help many people? So I do. I don't check them as quick as this after hours. So, and if there's other news other than earnings during earnings season, I'll talk about it. But it's a quiet start to the week for earnings. Tomorrow, like I said, it picks up a little bit, so we'll cover those earnings as they come out. 6-month stretch. 180 days out after the move, the money into an underdog. That's currently happening. Yeah. Still like Salesforce. Yeah. I think they were the other one to report. Maybe some more layoffs. Oh, let me not say that. I'm not 100% sure. I read so much this weekend. Yeah. Nice. You guys are betting on 25 basis points as well? Yep. I think that's both fine and also acceptable. We're not going to throw a fit, right? That puts them at their 5% now, which they've raised it anyways, but it puts you at the 5% mark for their range. But I would think a safe bet would be 25 basis points. Yep. All right. Good enough? Covered everything here for you and everything worked? About that. All right, we'll be back later for Jazz After Dark. Come hang out with me. Let's talk about vacation. You know what I mean? We're always talking about retirement. Let's talk about vacation. Save you a few bucks, especially if you're coming down here to Florida and Disney or anywhere in a really, really populated tourist area. I'm sure we could save you some money. You guys enjoy the rest of your day, and hopefully we will see you later. Adios.